Welcome to Trading the Close on this Tuesday. I'm Toni Valliere with Verified Investing. And here's what's making headlines today. Disney stock tumbles after a vital part of its streaming business turned a profit for the first time, but the company expects weaker results in the future, which sent its stock down nearly 10% in early trading. Tesla stock falls as the government ramps up self-driving oversight and scrutiny over driver assistance systems. Private equity firms are looking at Peloton for a potential buyout. Last week, Peloton announced the CEO would be stepping down, and the company plans on cutting 15% of its staff following a very disappointing earnings report. Upstart, Arista, Lyft, Wynn, and Twilio are among the companies reporting earnings today after the bell. The Dow was up for the fifth straight day as Treasury yields ticked lower. So let's get a check of where things stand just minutes before the closing bell on this Tuesday afternoon. Right now, the Dow's still up 65 points, 0.17%. We're seeing the NASDAQ down slightly, 17 points, 0.11%. We've got the S&P 500 up 10 points, 0.21%. Oil down slightly, 18 cents. Gold down slightly, just over $9. And Bitcoin down just over $140 at this time. Let's bring in Chief Market Strategist Gareth Soloway, joining me now with a recap of the day's trading. I know in the game plan today, you mentioned that most companies reporting earnings were not bouncing. Rather, they were plummeting. And you said not good, not a good sign. Also, that you're predicting a hard landing as the S&P continues to float.
Yeah, and I think the data we got today on Disney, it just reaffirms that. We saw Starbucks, we saw Etsy, we've seen Expedia, all of these companies. In fact, the most companies are missing guidance going forward. They're lowering their guidance since the COVID. So since that pandemic, this has been the worst it's been. And what it speaks to is just the consumer is starting to feel the pain, right? And that just means to me that the Fed is going to have to be very nimble here with inflation elevated. How are they going to handle this? Because the economy is starting to slow down faster and faster, and that's going to be something that we have to watch. And so I just don't believe that the Fed can engineer a safe landing, a perfect landing here. It's just, you go back to every situation in the past, and it just hasn't happened. It's so hard. I mean, it's almost impossible because they're always acting on past data. They're looking at what happened last month or 2 months ago or the quarterly GDP, and they're not really reacting to what's going on this second, and that makes it very hard to have a perfect landing.
How do you prepare for that?
Yeah, so I mean, overall, as a trader, you just want to be more defensive, more in cash, more in bonds, for instance, bonds paying a guaranteed 4 or 5% type thing, gold, different things like that, and then really again just be careful. Like some people are just all in, leveraged to the hilt on whether it's crypto or if it's stocks, and really this is not the time. It's at the beginning of the bull run you want to do it, not late in the bull run when the stock market's up exponentially over the last few years.
All right, this is still floating.
Yes, I mean it's just almost funny to look at because these are the last 3 trading days for the S&P. So here's your gap from here to here, and then we just floated up, right? Gap from here to here, we floated up. Gap from here to here. Each gap, by the way, notice how each one is getting smaller. Look at the size of this, the size of this, and the size of this. So what that does tell me is that the markets are starting to run out of steam. Every time it's opening up a little less in terms of the gap size from the previous day. And again, you can see today we had this kind of general float, but then we did get a little bit of a sell-off and then kind of a float back up towards the end of the day. So to me, the markets are getting extended here. I actually have some interesting stats. If we look at the S&P, let's look at the spiders. We hit a gap fill today, which is a key level. So right here. Okay, so you can see how we kind of wicked through it and we've pulled back inside of that or underneath that level. And then just using my Fibonacci extension tool, if we take the all-time high of the S&P to the recent lows, that level is exactly a 786 retrace. Look, it almost aligns perfectly. And I'm a big fan of saying, okay, if you have 2 lines that can connect or at the same price point, the odds are, I mean, this might have been a 5 out of 10 resistance, but if you add a second line in there, now it becomes like a 7 out of 10. So it raises the probabilities of a pushback down in this direction, especially because we have really gone up very sharply in a very short amount of time. So again, I would generally expect if I looked at this and I looked at 100 of these charts, probably 70% of them would have a pullback at this level.
Okay, would you short this?
Yeah, absolutely.
For tomorrow?
I've been picking up some NASDAQ 100 puts, so I have some puts. They're very long dated, so I'm giving myself lots of time, but I absolutely am inching in on the short side, no doubt about it here.
I know you follow Disney today.
Yes.
Major
that was
company.
Nuts. I mean, yeah. So again, this is just one of those situations, and this was a level in the game plan. So we talked about tons of support right down in this range right here, and that it did come down. In fact, this again is just proof to me that, you go to Disney parks, it costs a lot of money. And so if you think about what are people going to cut back on, these really pricey vacations, you go to a Disney park with a family of 4, it's hefty. So again, you're seeing this, and even their streaming service, they said, they did really well this last quarter, but they said, hey, it's going to slow down now in this coming quarter. And these type of things, again, are signals to me that, that consumer's starting to hurt. And it's
sure.
it's a very slippery slope. The consumer holds on as long as they can, because listen, if I'm used to spending and going out to fancy restaurants or whatever, it's very hard to go back to McDonald's, afterwards. You're kind of like, oh man.
They're not cheap either,
right,
though.
and that's not cheap either now, right? So I think that's something people have to recognize, is that people have to be really hurting for them to be cutting back, and we're seeing it through so many earnings releases now that it's starting to become very apparent to me that consumer's hurting and starting to pull back.
Palantir's another one that you followed today.
Yeah, so if we look at Palantir, guys, this was another level we talked about in the game plan right here, upsloping trend line right here, and we literally went right there. Now, these were just day trading levels, so again, just be aware that for me, it'd have to fill this gap all the way down here for me to start getting interested as a swing trade, because again, swing trades you hold for a longer period of time, and you want to be more secure on your entry point, like much more discounted than just this little dip, because really, if you think about it, Palantir's only back to where it was trading like a week ago. Right, so it's not. Yes, it's a big percentage move, 15%, but it's that's just what it gained in the last week. So for me to swing it, it needs to really have a correction where the valuation becomes much more attractive. These are just more day trading lines up here, where we day traded it in the Apex Live day trading room.
Before we move on to gold and Bitcoin, can you bring up Zoom? You put an article out, and that is on verifiedinvesting.com, and I find this fascinating. This is basically how people work these days.
Yeah.
At its high point, it was around $600
Insane,
during COVID, and now down into the $60 range.
Yes.
So I'm asking you, is this something you're looking into possibly?
So I do have a small position in this. It is relatively small because it's not. It's a risky play, but the valuation on this, and so number one, I look at charts that are beaten down, that are out of favor, and there's no doubt that Zoom is out of favor. If you look at the chart, if I zoom out, look at how if I zoom out, that's funny, but yeah,
he's here all week,
exactly.
By the way.
But look at where it's trading relative to its history, right? You can barely see it down there at the lows. So that starts to make me say, okay, this hasn't participated in new all-time highs on the market. It's still beaten down. And to be honest, I still when we do meetings in the office, we're still using Zoom.
Yes.
That's what we're using.
Yes.
I think
I've
that's
got
what
one
the world.
today on the show.
Right, exactly. And so for me, I say, okay, well, the chart is interesting. It's low end. It's got this wedge pattern that's kind of condensing and pushing it into kind of focus. And then I started to look at their balance sheet. They have like $7 billion in cash. They're going to make $5 a share, so that puts the PE ratio at 12. I think the S&P is like 22 to 24 as an average PE ratio. So they're at basically half of the valuation of the S&P stocks. And again, having that amount of cash, it makes them a prime buyout candidate. So like whether Amazon, again, I'm just throwing this out, but like an Amazon wants to get involved in the video teleconferencing, this is a perfect buyout opportunity for some bigger player that just wants to take over and get a huge foothold in this arena. So
is that the only hope for this to go back up?
No, I think either way, the valuation at a 12 PE, it should probably be trading. You think about the tech stocks out there, most of them are trading at 30 PEs. So there's a lot of potential upside. I think one of the issues is people look at Zoom and being like it's a one-trick pony. So they're not really saying, well, what if they do this? But they also have $7 billion. They could go out and buy some interesting companies and actually make this into a much more interesting company and get that higher valuation. So there's so many angles to go here that this is actually one of my favorite plays right now on a longer term buy level.
Okay.
For the most part, I'm like, all right, I'm mostly out of the market on the long side. I'm very careful right now, but this one is actually one that I am in small.
All right, let's look at gold
Yep.
and then Bitcoin, because my next guest will be talking about cryptocurrency.
Nice. So here we have our Bitcoin, our gold chart real quick. And really gold, just a small pullback. I think the biggest thing to just keep in mind is that, you've broken out from this big consolidation phase from 2020. We went up huge. We've now just got to digest. So I have my 2 levels that I'm just continuing to watch. So anything in here is kind of my accumulation zone right in here. I still think, again, whether we go like this and start going up and then pull back. At some point, we're going much, much higher. So I'm still
bullish on this.
Still bullish
sure,
on this
term.
in the mid to long term. Shorter term, I still think it could come in just to digest more of those gains, maybe shake out some of the weak hands.
Okay.
And then Bitcoin just continues to consolidate here. Channel. Classic channel, parallel lines here. We just kind of came up. Notice the dotted line here. I don't know how many people at home can see this, but there's a midpoint to this channel, and that's right where we ran into resistance here. Now, the big question I have is, are we making a bullish flag pattern, right? Are we doing this, in which case that sends us up to here, or do we curl over, in which case we retest here? Right now, you have to give the benefit of the doubt to the bulls. It's making a bullish pattern, but obviously it's not fully formed yet, right? So just to go over this again, and I went over this in the game plan, is when a bull flag forms, there's periods where there's the starting point where it looks like a bull flag, but the probabilities are not as high because it's not fully formed. Like
it's immature.
Exactly, it's an immature pattern. And so the more sideways you get, the more the odds go up that it's gonna actually go up. And so we're right here, we're kind of at this, like, this would be like a teenager right now. And I wanna get it to be
tough.
like, yes, exactly, exactly. They're unpredictable.
They are unpredictable.
You know?
I got two of them, yes.
So you go like this, and then if you can get a few more sideways days, now it's mature, now it's an adult, and then the odds are it does follow through to the upside. So still watching here, but again, giving it the benefit of the doubt, maybe neutral to bullish bias, assuming we don't roll over too much here.
Okay, tomorrow we've got Uber, Affirm, Shopify, Airbnb, and AMC reporting earnings. So
yes.
Another big day ahead.
Another big day, and after hours we have UPST, like you mentioned, Rivian. Looks like Rivian's getting a little bit of a bounce on earnings here initially. Was down, if you see, this is where it was trading earlier in the day. So, I mean, it is pushing back up towards those levels, but it had come down quite a bit. But that's a nice little move on Rivian in the after hours. Twilio reports, looks like that thing dumped out initially. It's bounced a decent amount. So yeah, we're still in earnings season, although we're kind of at the tail end of earnings season. But you said, there's a lot of companies. Shopify will be an interesting one tomorrow to watch as well. So in the game plan, I will cover these levels. If something's moving tomorrow, I'll be telling it the levels that I'll be playing them at.
And then we'll recap.
That's right.
In the afternoon, trading the close. Gareth, thank you so much.
Thank you.
We appreciate it. Remember, you can catch Gareth navigate the charts in real time. That's every weekday morning before the opening bell, starting at 9 a.m. on his show. It's called The Game Plan. It airs right here on the Verified YouTube channel. We're not done. I got another special guest. His name is Brian Dixon. He's the CEO of Off the Chain Capital, which is a Warren Buffett value-style investment firm focused on acquiring blockchain assets at a discount. He's also the author of 4 books covering digital assets and advanced technology. So welcome, Brian. Thank you so much for joining me on Trading the Close this afternoon.
Thank you, Tony. I appreciate you having me on.
So let's start off having you tell our viewers about Off the Chain Capital. What do you offer and how did the company come about?
Sure. So I got into the Bitcoin space in 2012. Off the Chain Capital was launched in 2016. And what we do with this strategy is we're looking for unique ways to acquire $1 worth of blockchain assets for 50 cents. That's the simplest way to think about it. And what we're doing is we're taking Warren Buffett, Benjamin Graham's traditional style of discount value investing, and we're applying it to this new technology sector that is blockchain and digital assets. And the way we go about that is we look for unique opportunities in private companies where we find forced or motivated sellers of their blockchain equity, where we can go in and act as that liquidity provider to acquire that stock at a discount from where we believe it's intrinsically valued. And so over there, we focus on very mature businesses in the blockchain space. So we don't invest in startups. These are very mature, profitable, cash flowing, minimum to no debt style businesses. And then we apply that same strategy directly to digital assets as well. So something that's worked out very well for us over time is we were able to acquire a large amount of Bitcoin at a significant discount through bankruptcy proceedings with exchanges that had gone bankrupt. And so there was a very large bankruptcy proceeding in Japan back in 2014 called Mt. Gox. I believe it's the largest bankruptcy in Japanese history. It's about a $10 billion estate. We went around the world offering liquidity for people that were sitting on these bankruptcy claims where the underlying asset was Bitcoin, and then offering them a discount to what the asset's value in the claim was. And that allowed us to acquire a big position in Bitcoin at a large discount. So these are some of the strategies that we implement with Off the Chain. And we really do our best to try to outperform Bitcoin. And we've been rather successful at that over the years.
That is fascinating. I love it. Do you work with individuals?
We do. So our investor base, it's a private fund. We have around 230 partners that are in the fund today, and individuals that meet the qualified purchaser threshold are candidates to invest in off the chain.
Okay. All right, let's talk crypto. Last week we saw a sell-off with Bitcoin. Why do you believe that happened, and do you think we could see that happen again in the near future? I imagine you just saw Gareth go through the chart on Bitcoin's price today.
So the sell-off last week was right before the Fed had their meeting, and we've seen that over the last couple times the Fed has had this meeting. And so that was the initial reason why there was a sell-off. People weren't really sure what the decision was going to be, whether they were going to keep rates the same, lower them, or even hike them. And so I think people got a little nervous closer to it, and we saw a short-term sell-off for people that were treating Bitcoin as a risk-on asset. And then after the Fed came out and announced that they were going to leave rates unchanged, pretty quickly, within 24 to 48 hours, we saw a bounce back, and the asset went from around 57,000 back up to about 64,000. And I believe that's something we'll probably continue to see. There's still a lot of people in the market that are trading Bitcoin and treating it like a risk-on asset, which I believe is the wrong way to look at Bitcoin. In my opinion, Bitcoin is a long-term store of value, flight to safety type of asset, and you shouldn't be looking at it like a risk-on asset. But there is, I would say, about 25-30% of the tradable market that's being moved around right now, and some percentage of those individuals or institutions are treating it as a risk-on asset, and that's why we saw that volatility and movement right around the Fed's meeting.
Following the charts here with Gareth, I know Bitcoin's price tends to follow the market's movement, not always, but do you see the economy heading toward a recession by the end of this year and ultimately taking a deep dive in Bitcoin with it?
I think we already have been in a recession for quite some time. I just don't think it hasn't been formally announced yet.
Yeah.
But I think that in a situation like that, I don't think we're going to see a tremendous drawdown in Bitcoin. I actually believe the next 12 to 18 months are going to be a very favorable time to be exposed to the digital asset space. And the reason I believe that is if we look through historical trends with how Bitcoin and digital asset markets operate, there's always great performance historically in the 6 months before the Bitcoin halving cycle and in the 12 to 18 month window post Bitcoin halving cycle. And for viewers that may not be aware of what the Bitcoin halving cycle is, every approximate 4 years, engineered into Bitcoin software, it cuts in half the new supply of Bitcoin issued into circulation each day. So a couple of weeks ago, this just happened again. So before the Bitcoin halving happened on April 19th, 900 Bitcoin were produced and released into circulation by the network each day. After the halving, it got cut in half to 450 Bitcoin that are produced and released by the network each day. And that'll last for another 4 years until we have our next halving in 2028, and that'll get cut to 225 Bitcoin a day. And what we've seen historically is that when that supply gets cut in half and we have an increasing adoption rate, which is what we're seeing around the world, usually that drives performance in the digital asset markets at large.
So do you have a prediction? Do you have a price that you see it reaching a year to a year and a half from now?
Yeah, I think we would be potentially looking at 150 to 200,000 as a floor, and then $1 million as a ceiling for this cycle, and it's going to fall somewhere in between there. I know that's a rather large range, but if you look at some of the historical data trends around how Bitcoin performs and standard deviations above its stock to flow model, then that's really a sweet spot of potential in between like that 150 to 200 to $1 million range, somewhere in there.
You're not the first to say that. I have heard that before from others. So the Bitcoin ETFs in the U.S., they brought in quite a boost to the currency. Now the Hong Kong Bitcoin ETF wasn't as much of a boost as in the U.S. Why do you think that is? And do you think it will pick up again before the end of the year?
Sure. So the Hong Kong ETF is a tremendously smaller market than in the United States. So relative to that, I actually look at the Hong Kong ETF as did quite well for its market relative to size. They brought in approximately, I think, 312 million as of May 6th, if my data is correct there. And with that, if we were to translate that into what that would look like in the United States, that's equivalent to around $50 billion of inflows in the United States, just on how the market sizes compare. And so that was actually very good for the Hong Kong market. Now in the US, we saw billions and billions of dollars pour into these in a very short period of time. It was a huge performance boost for the asset. We saw BlackRock's Bitcoin ETF reach $10 billion in 2 months, which is unprecedented. That's never happened before. And I believe it was was actually the most successful ETF launch in US history. Now, today, the largest Bitcoin ETF fund is Grayscale's GBTC product. They're probably somewhere in between 17 to $18 billion in AUM. And then BlackRock's very closely behind. So BlackRock may actually surpass Grayscale. That kind of remains to be seen. But what I'm excited about is a lot of the investment that's come into the ETFs initially, I think was largely driven from retail investors and RIAs. What hasn't happened yet is I don't think we've seen large endowments, pension plans, or large sovereign wealth funds start to allocate. And the reason that hasn't happened is because these ETFs just got passed a couple months ago. These large institutions that are managing hundreds and hundreds of billions of dollars, they have long due diligence timelines. Then they have long investment committee approval timelines. And then once they get through those two processes, they actually go and they speak with their clients about actually allocating to this new asset and educating them and explaining why. And so I think later this year into 2025 is really when we're going to start to see the Bitcoin ETFs catapult in terms of inflows.
Okay, interesting. Do you have any recommendations for choosing an ETF?
I think for most people looking to get exposure to an ETF, there's a lot of different options in the market today. Most of them are pretty similar around fee structure. Grayscale has a higher fee than the others, but the remaining ones are all very, very close. Grayscale is actually launching a new product that's going to have much lower fees than their existing one they have in the market today. But for the most part, they're all the same. There's very small differences. Most of those ETFs chose Coinbase, which is the largest cryptocurrency exchange in the United States, as the custody provider. Coinbase is very safe in regards to how they do custody for just their general customers and also these Bitcoin ETFs, with a lot of things being stored offline in cold storage. And I think that, the variety of options out there, Bitwise, BlackRock, Grayscale, there's all really good options for people to take a look at. Fidelity has one as well. It's more just what fits for that individual. And I think a lot of people too will be looking at, what can they access from their traditional brokerage account, because some brokerages still are not allowing people to invest in the Bitcoin ETFs. And that's another big thing that we've seen restricted inflows from where I believe it could go, is that some of the large traditional finance players restricting the access of their clients to invest in this product. At some point, the demand will get so great, they're going to have to change. And we're starting to see that now with organizations like Morgan Stanley and others. But there's still a lot of people that can't even invest in them because their brokerage accounts won't allow them to yet.
Yeah, no, it's so true. When do you see that changing? When do you see Bitcoin becoming more mainstream and widely accepted?
So I think throughout the remainder of this year into next year, we'll see a significant change in that. I believe that the asset class now has a tremendous amount of data over the last 15 years. It's been the best performing asset 13 out of the last 15 years. Clients want exposure to it. And so what's ultimately going to happen is if a large traditional financial institution is restricting or not allowing exposure to this asset, people will set up accounts with different brokerages and they'll get it that way, because the data is pretty clear that people are ready to have this as part of their portfolio. I think we're seeing a lot of RIAs recommend somewhere in the 3 to 5% range is where the exposure should be in terms of the overall portfolio. And there were even reports out that BlackRock's financial analyst, one of them in a meeting with some of their ultra high net worth clients, was noting that a 28% exposure to Bitcoin within one's portfolio is not unreasonable. Now, that's a huge stride forward from where BlackRock was just 12 months ago when they were recommending 1 to 5%. So for them to recommend a 28% exposure to Bitcoin in the overarching portfolio, I think that speaks volumes to where we're headed as a market.
No doubt. Brian, where can our viewers go to get more information on your services and your books as well?
Sure. So please check out our website. It's offthechain.capital. So not .com, .capital. And then if anybody wants to follow my insights, please follow me on Twitter. And my handle is @BrianDixon06.
You were a pleasure to talk to you. You kept everything simple. It didn't go over my head. I appreciate that very much because some of this can be very complicated. So thank you so much for your time and your insight. We appreciate it, Brian.
Thank you, Toni. Take care. I appreciate it.
You too. Well, that does it for Trading the Close today. We will be back tomorrow afternoon, so make it a great rest of the day.